on best practices on how to get started preparing your 2021 tax returns. My name's Mary Ford. I am a tax director here at Sobel & Company. I am joined today by my colleague, Kelly Mayer. And, we're going to take you through, some of the things you need to look out for, give you some advice on how to approach the process, give you an update on what's new this year. And, the goal is to, at the end of the webinar, to make you feel a little more prepared to have your taxes returned this year. And hopefully it'll be a much smoother process. I know a lot of people, this is not a comfortable thing for you to do, but we're going to try to give you some information to help you through that. Kelly, if you take me to the next slide, I just want to give you an overview of where we're going to take you today. We're going to talk about how to get started. What are some of the key forms, just to jog your memory of what you need to be looking for. Forms that do get sent to the IRS that you'll need to give to us. We're going to talk about, what are some of the, appropriate deductions and credits. We thought it would be interesting for you to understand what happens to your information when it enters the workflow process here at Sobel. We'll give you some background on that. And then we're going to explain what your responsibilities are with your taxes. Once we do our job here and send you your package, there's some definite things we want you to take responsibility for and to do in order to finalize this process. So we're going to go into that. Next slide, Kel. So the first bit of advice is start early with this process. The tax forms that are being mailed this week to you. You probably started receiving your W-2s from your employers, maybe a few small 1099s from banks. The brokerage statements typically don't come out until February, but a lot of the forms you should be receiving them this week or next week at the latest. Start early so that you can give yourself appropriate time to gather, to really go through your information to substantiate what deductions you have this year and making sure that you can claim all of the deductions and credits that you are eligible for. And another reason to start early is if you get your returns filed earlier, you can get your refund earlier. Okay.
And I think it's, worth mentioning too, there are a lot of articles and notes out there that the refunds may be delayed this year. The IRS is sort of burdened down by the ongoing pandemic over the last 2 years now. Mm-hmm. So they have already come out and said that the refunds may take longer this year than they have in prior years. A lot of times it wasn't uncommon to file your return electronically and receive your refund back within 7 to 10 days. It may take a little longer, but hopefully getting ahead of it, you can still expedite that process a little bit.
Yeah, excellent. That's true, Kelly. Thank you. So the tax return filing deadline this year falls on a Monday, April 18th, for most people in the U.S., and that's because of the Emancipation Day holiday in Washington, D.C. falls on Friday the 15th. So we get an audit. The IRS is closed that day, so we get another couple of days to get your tax returns done. Lucky for us, we'll be working that weekend. And those of you who live in Maine and Massachusetts, you get another extra day. Your returns are not due until April 19th. Okay. There are, if you know that you're not going to have all your information together, maybe you're waiting for your business. If you're work for a flow-through entity, and you're getting a K-1, that you're not going to receive that in time for the April 18th deadline, and you're going to go on extension, let's get that done sooner this year as well. Because when you file for an extension, it's for 6 months. It'll bring you to October 15th, but you don't get an extension of time to pay. So get your information to us early. We can figure out if you're going to owe any money. That way we can have you, get that extension filed and make your payment. You can wait until April 18th to make your payment, but let's get the numbers crunched so you know what's coming. All right, Kelly. I think I'm gonna let you take us through now this next part of what information to gather and how to gather it.
So our best practice that we recommend to all our clients is using one of the tax organizers that we provide. At this point, probably most of the clients have received their organizers at this point. There may be a few, coming in the next couple of days, but a lot of that already went out to everyone over the past week or so. So you can check your emails and look for that. It's an excellent guide to what was included in your return in the prior year. So we like to say that it helps jog your memory of a form or an item that you need to include this year that you had in a prior year. It also helps you review everything for completeness, because that helps us prepare your return faster if we don't have to follow up with you for missing information. Believe it or not, sometimes one of the items that slows us down most in the process for us internally is the back and forth that we sometimes have to go through with you, the client, in order to make sure we have everything and collecting all of the information. Because obviously it's very important that we don't miss any items. So if you take the time to go through this organizer ahead of time and make sure everything's there that you have ahead of time, it can expedite the process for us. Additionally, with that package, there is a questionnaire, which is so helpful for us and for you, because it will identify new items potentially that maybe weren't on your organizer in a prior year. But if it's something new for the tax law this year, you can, sort of identify that you need to include it for your return this year. It helps, give you a guide for what you're looking for, what information to include when you send us that whole package. So that's our, recommendation as far as having a guideline to look back to in order to put your information together for the current year.
Okay, Kelly, there's a couple questions. Someone asked if our tax organizers are online. Catherine, at this point, we do not have, an electronic organizer available to our clients to fill out. That is something that we're looking into for the future. We do send out the short form organizer, which is really just a checklist and, a questionnaire that can be filled out electronically and sent back to us. But as far as the larger organizer, that we don't have that at this point. But, I think there is definitely a need for it in the future. And and then Mark asked, about the organizers. We don't send out paper organizers to everyone, really just a lot of the clients that, requested it in the past and have used to receiving that in the past. It seems like we were mailing out so many organizers and they weren't being used. So in an effort to just sort of cut down on the bulk mailings, we stopped sending them out to everyone, Mark. But if you need one, let me know.
Yeah, absolutely. You can contact us and that can be sent out. I think too, another reason is that as far as, the questionnaires and things like that, it's more general, but an organizer is very tailored, so it's very client specific what's included in the form.
Mm-hmm. Let's see. Do you want me to move your slides, Kel, or do you want to do it? It's up to you.
Oh, I'm trying, but sure, go ahead. Okay. So I think we're up to the next slide here, which is the forms that are typically required. Obviously, this list is not all inclusive, and also every form on here is not applicable to every taxpayer. Again, you'll have to go through and identify which forms are specifically includable for your own personal return. But these are just some of the common ones that if you receive that we will need in your package. So your W-2s, 1099s, often come for your interest and dividend. I think it's worth mentioning too, the 1099 consolidated forms that come from the brokerage firms tend to be electronic anymore. And that may have been an opt-in that you have done in the past. If you're able to receive your statements online, often your tax documents are also available online. If that's the case, you will probably receive an email when those forms are done. Again, Mary mentioned those usually are completed sometime during February. And then you would have to log into your account and download the form in order to send it over to us. Also worth mentioning that sometimes those forms can be corrected or amended. So just because you sent it in, keep an eye on your email and monitoring that, you may get a follow-up in a few weeks after that an amended form has been prepared for one of your accounts. And should that occur again, please download it and send that over to us as soon as you find that, even if you've already sent over all your other documents to us previously. But again, this list includes 1099-Rs. If you collect Social Security, your SSA 1099, unemployment. That's an interesting one because for New Jersey, if you are receiving unemployment benefits, you do have to log on to the site with NewJersey.gov where you applied for your benefits originally. They will not mail this form 1099-G out to you. It's an online form. You'll have to go back to the website and download it in order to include for us. That's not one that you'll see come through the regular mail. The 1099s, miscellaneous and non-employee comp, those are in the process right now that companies are preparing those. They are all due by January 31st. So coming up here within the next week, all those should be coming out by the end of this month and you should receive those. Mm-hmm. So just a couple of items that we're looking for when we're preparing your returns. We can move to the next slide, Mary, and some of the other ones.
For those of you who want to get a copy of the slides, there is a copy included in the presentation today in the handouts button on the webinar page. Go ahead, Cal.
Sure. Some of the other forms to look out for, the K-1s from your investments in S corporations, partnerships, trust estates. These take a little longer. The filing deadline for these entities is not until March 15th. So you may not see these forms come through until thereabouts or maybe even after. If you are missing one or two of these forms and have pretty much everything else, don't let that hold you up sending everything out to us. If you're waiting on one or two of these forms and you know they're not going to be ready till mid-March, you can send us the rest of the package and we can absolutely get started with that. We wouldn't want to hold up the preparation of your whole return based on one or two of these missing documents. So again, some of these come much later in the year. If they go on extension, you might have to wait quite a while. So most of the taxpayers who receive these forms are sort of familiar with that process at this point. But of course, if you have any questions, you can reach out to us. Again, I think there were just a couple other forms listed on there on that last slide that may or may not be applicable. Some are informational. Again, usually these come through the mail and you'll see tax document enclosed. If unsure, send it over to us and we can take a look as well. Different mortgage statements, 1098s, 1099s, all things you want to be on the lookout for. Mm-hmm. Yep. Okay. Yep. Something new this year, these IRS letters, they're being mailed out this month. So due to changes in the legislation and the American Rescue Act earlier in, I believe it was March of 2021, mm-hmm. They made changes to the child tax credits, and also a third economic impact payment went out. If you were eligible for either of these items, and if you received either of these items, you should be on the lookout in the mail for one of these letters from the IRS. 6419 for the advanced child tax credit, or 6475, which was the 2021, that third stimulus payment that came out in March or thereabouts of 2021. And we will need those letters to reconcile the information for your return this year. So it will include the amount that you received, and we include that when we prepare your return. Again, I think those are in the process of being mailed currently. I think a few clients have mentioned they've already seen theirs come through. So be on the lookout for those if that applies to you. Yeah. Also, it's listed on here, and a lot of our clients have already provided this information to us in the past, which is a copy of your driver's license. It's most likely we have it on file for most clients, but if you've renewed your license and the expiration has changed or there's new information, you can provide us with the updated copy. If it's already on file and there's no change, then you can ignore that item for this year. Okay. The next slide is specific to business owners that file specific forms Schedule C or Schedule E. If you have a business, if you're self-employed, we would need you to summarize your income and expenses for us. That can be done in a multitude of different ways, depending on how you keep your information. That could be a QuickBooks file or an Excel, a write-up of how you keep all your income. Include those forms, 1099, non-employee comp that you receive, and send those over to us. But be aware that if you made less than $600 or received less than $600 from a specific subcontracting engagement, you may not receive the form. So it may not tie out perfectly. Just make sure when you send the information over to us that you include the total of all of your income received through your business, and then a listing of all your expense categories. Same thing with a rental property. One thing to note with a rental property also is if it's a repair type expense item, we may request some additional information if we have to determine that the item may need to be capitalized or depreciated versus expensed. So sometimes we may need to look into a little bit more in terms of receipts or questions regarding improvements made to a rental property. But when you send over the info, please note that if any improvements have been made when you give us that listing of expenses.
Yep. Kelly, I'd like to just add one more thing. If you have a business and you're incurring expenses that are related to you performing your job in that business, and you're not sure if the expense is deductible or not, put it in there. Put a line item on it. Give us a little description of what it is, and if you have a question about it, we will address it when we prepare your return and explain it to you then. That's just one thing I just wanted to note. If you just give us that information if you're not sure, and we can make a determination here and explain whether or not. A couple other quick questions came through, Kel. I think I might want to address it very quickly. It looks like we have some people on from maybe outside of this country that are one of our expats, because they're asking about a foreign template. Yes, that is really all you need to do. If you are a foreign, U.S. citizen working abroad and living abroad, the foreign template has all the information we need to prepare your return from that. So you don't need to worry about the organizer, Peter. And then, is your portal updated to accept uploads of our documents? So we are transit. Not everyone has a portal here in the firm, Richard, but we are using a transfer data share file app for you to transfer data to us electronically, and you can access that portal, that share file app, secured email via our website. And I just we're going to be doing another taping of how to do that, and that's going to be coming very soon, and we'll put that up on our website too, on how to transfer documents electronically. Okay, Kelly, I think does anything else on this topic for you? Because I think we're going to move on to what are the changes for 2021. If
no, I think we're good.
Okay, so what's new for 2021 from last year? Number one, under the American Rescue Plan Act, it was determined that you could exclude, if you made less than $150,000 of income, up to $10,200 of your unemployment compensation received. Well, for 2021, this benefit or this exclusion was not extended. So if you were unemployed during 2021 and received unemployment compensation, that will be taxable for federal purposes. So there might, and if you didn't have enough withheld, federal taxes withheld, you might owe a little bit of money with this filing, unfortunately. For the state of New Jersey, unemployment compensation is not taxable, but if you live in other states, it may be. It just depends on the state. I know New York, federal unemployment income is taxable in New York. Another new thing that could help a lot of individuals is the student loan debt forgiveness that came out under the American Rescue Plan Act. They expanded if your debt's forgiven, it was expanded that you don't have to pick that up as income. The general rule is if you have debt forgiveness, if you had credit card debt that was forgiven by a bank, you have to pick that debt amount that was forgiven up as income on a Form 10, and it will be reported to the IRS on a Form 1099-C. Now, because of the new act, if you have qualified student loan debt, meaning it was debt that was given to you from a U.S. organization or a university, then you can exclude that forgiveness as income. So you'll get a 1099-C, but you would just indicate that it was qualified student loan debt, and we can not pick it up as income.
Before we move on, Mary, I think we just had a couple of questions come through related more to what we were just discussing with business income and expenses.
Okay.
So I just want to bring these up. Michael had asked how many years to keep records. So I think Mary and we had just been discussing this. The IRS can go back and audit for 3 years. So obviously you want to keep those years, but as a recommendation, we say keep 7. There may be reasons you need to look back. There may be items in the past that something comes up and we need to go back a little further than that in your tax keeping record. So that's our recommendation to our clients, is to keep 7 years of records. And again, when you send everything over to us, if you have receipts, we don't need copies of every single item. That's just something you can keep, but we can use totals and we can work from that. Jonathan had asked, how do I determine expense categories as I just became a consultant?
So one general thing that you can look to, if you Google Schedule C, Jonathan, which is the form that's in your Form 1040, where you would report your business income, you'll see there's an income section and then there's expense section, and it kind of lists like general categories there for you. That'll give you some a sort of a start. You can also, the internet is a great place to kind of like just to Google, like, I started my business, what are some good business expenses that I can deduct? You'll find a template there. So I think, did you have any other pointers on that, Cal?
Just back to what you had said earlier, if in doubt, send it over to us and we can look at that. Any item that you think might have been relevant in setting up this business or in this consulting engagement, send it over and include it. And then if there's a question, we can look at it and we can discuss it. But better to have it and be able to include it than to exclude it thinking it's not a valid expense, when in fact it really can be a deduction. Ken had said, my son often gets paid for freelance work through Venmo. Venmo said they're going to now send out 1099s, but not all his freelance work is over 600.
Yeah.
I'm not sure how Venmo as an app will calculate those.
Yeah, that's a new thing, Kelly. Believe it or not, I did read this. So it's a different 1099. It's a 1099K. So it's as if you were collecting your services, being paid for your services via a credit card. Venmo is like sort of like a debit app. So Venmo itself is going to report the total income you received through your business Venmo account to the IRS. So that's what you definitely want to make sure that's included on your return as income. Okay. I think that's important. And said, what is needed regarding a car lease and then purchased for business in 2021? So we typically would ask for your lease agreement and then, the document where you purchased that vehicle. We can, you definitely want to provide copies of any kind of contracts that you've entered into for business purposes that are related to assets used for business to us, so that we can account for that properly. All right, good.
Okay, so let's move back to.
And so here's another one, cryptocurrency transactions. This has been wildly popular over the last few years. In fact, for 2021, with the value of crypto assets going, I think the high was close to $65,000, Kelly. It started the year at $29,000. So if you cashed in some of those crypto assets to realize maybe get paid for that appreciation in that asset, guess what? You're going to have to pay tax on that. The IRS will treat crypto transactions or crypto currency as an asset. So just like you would have to report with a sale of stock to the IRS on a Schedule D, when you sell or exchange or crypto assets, that will be reported on Schedule D. Now, Kelly, the trick is that a lot of these vendors that deal in crypto, they're not regulated by the IRS. So they're not required to report to you all of the transactions that have a tax impact to you for the year. So the onus is on you, the taxpayer, then to go into your crypto account and to summarize those transactions for your tax preparer so that we can determine if there's a tax impact. So if you simply purchase crypto assets for the year because you want to get into the game, merely purchasing a crypto asset is not a taxable transaction. It's only when you either exchange it or you sell it. That's when you have to notify us. If you purchased assets, you have to tell the IRS that you are now a dealer in cryptocurrency. So they're really putting an eye on this asset. And I know for the sake of time, I'm not going to really go into all the details of this. But if you purchased assets, if you exchange them during the year, then you will have to check the box on page 1 of 1040 to tell the IRS, I own cryptocurrency. So they're going to know that in the future, you better be reporting either a gain or loss at some point. All right. Next, I have, and I just wanted to go over now for the last change, the IRS will be changing, the tax brackets, standard deductions, and certain other items for inflation. So this year, the standard deduction has been increased to $25,100 for a joint return, $18,800 for head of household, $12,550 for all other taxpayers. And for those of you who are over 65 years old, or blind, you get an extra exemption, or both, for $1,350 per person if you're married, and then you get if you're single, you just get an additional $1,700. Okay. Now, because of these amounts have been so high, the Tax Cuts and Jobs Act brought this out to us the first time. A lot of taxpayers are finding that they're not able to itemize their deductions. So, but we still want you to keep track of your itemized deductions, because the way the tax law works, there's a couple of things. You take the higher of the two. If your standard deduction is higher, you're going to take the standard. If your itemized are higher, you're going to take the itemized. We won't know that unless you give us all that information, right? So we still want you to keep track of it. Another reason to keep track is, we're going to mention it later, that there may be a state tax deduction still for some of these itemized deductions that you can take on your state return, even though you're using the standard for your federal return. There may be itemized deductions that we can take on your state returns. For example, real estate taxes, right, for Jersey. I'm trying to think if there's something else I wanted to mention here. I think that's it. Now, Kelly, now that we know about the standard deduction, can you take us through some of the itemized deductions that people need to look out for?
Sure. So we'll start with the medical. So if you have paid medical expenses out of pocket, that could be your insurance premiums for a health plan, a dental plan, a prescription plan. If you have a long-term care contract, please include all that information and summarize for us if it's however many months of the year at whatever rate, and give us those numbers. If you paid for doctors or dental fees, any amounts after amounts you were reimbursed for, same thing with prescription costs, basically anything out of pocket. Then there's some other items that are also includable, such as eyeglasses, contacts. If you have any specific medical equipment, all of that can be included. So include those amounts for us. This is, again, similar to the business expenses. We don't need all of the actual receipts unless that's how you prefer to track things and give them to us. But a sheet with a summary and totals is perfectly fine for us to work from. Again, if you have medical mileage, it's worth noting that the amount is 16 cents per mile this year. So we'll do the calculation if you can just give us the total number of miles. And as Mary was mentioning prior to this slide, that the limitation on the federal is 7.5% of your adjusted gross income. But for New Jersey, it's 2%. So whereas you might be phased out and not be able to take this deduction on the federal, if you still include this information for us, it may be applicable on your New Jersey return as a deduction.
Yeah, I see a lot of people who do get a benefit on their Jersey return for their medical expenses, even though they're phased out for the federal return. And that's mainly a lot of the one reason why that this comes into play a lot is that for health insurance premiums, if you're a W-2 employee and you contribute to your health insurance premiums through your wage deduction, that's not a pre-tax deduction in arriving at your state taxable income, Kelly. So we can pick that up as a deduction on your state return only as insurance premiums paid by the taxpayer. So that generally will yield a pretty good deduction for them on their New Jersey 1040 return. So Tom, to answer your question, yes, health insurance premiums are deductible, but only if they exceed 7.5% limitation on your federal return, and only if it exceeds 2% limitation on your state return, which it likely will. Well, I don't know about your personal situation, but it generally does for most people. Okay.
So along with the medical, and we can move on to the next slide here. This is new for 2021. Amounts paid for personal protective equipment, or PPE, can qualify as medical expenses. When I first heard about this, I said to Mary, I don't know if I kept all of my receipts all year for hand sanitizer and masks and other items that are COVID related, because I didn't know about this at the time. But if you have receipts for these, or if you have amounts that you spent on these items, include that to us when you send over your medical expenses for 2021. Again, on the slide, it mentions it still has to in total exceed 7.5% of your AGI on the federal to take this deduction. So take a look at that. And I think that might answer Richard's question. The 7.5%, yes, applies to your adjusted gross income number.
Yep. And Medicare premiums paid, that is considered, a deductible medical expense as well. Yep. So if you pay towards Medicare, definitely. And the medical insurance you pay to your employer, that is pre-tax for federal purposes, but for the state, you may get a deduction from the state return for that, because it is not pre-tax for state.
Okay, I think we can move on to our next itemized deduction, which is the state and local taxes. So if you might have heard this referred to as SALT, the state and local tax. On the federal return, it is limited to $10,000 for married filing joint, $5,000 for married filing separate. So a lot of times people have paid more than that in total, and we are unfortunately capped at the 10,000. But this goes back to what we were saying about the medical. Please include everything you've paid, because the limitation just for New Jersey on the property tax is higher. So if you may be able to, if you've paid over 10 and you're up to 15 in property taxes, you can take that amount on your state return, and other states may differ. So include everything. Include if you pay your real estate taxes quarterly, include the list, the date, the amount you paid, and send all that information over to us so we can determine what is includable for your return. Okay, mortgage interest is another item. So if you received Form 1098 for a mortgage, please include that. That was back on one of our prior slides, and the forms that you should receive if you have a mortgage. The home equity interest is still suspended. This was part of the Tax Cuts and Jobs Act back in 2017. But include it for us, because if if the proceeds can be interest traced to a qualified improvement for your home, we may still be able to include that. So send us the information and we can take a look at it. Again, if you have multiple loans, send the 1098 for each loan, as most likely if we don't see it, we'll end up asking for it. The interest is deductible for your primary residence and one additional residence, a second home or vacation home, if it falls within the guidelines. The debt limit, the acquisition of $750,000 for these debts that were incurred after December 15th of 2017. So again, you should get Form 1098 from the company issuing the mortgage. Include that over to us when you send your documents in. Let's see, charity is our next itemized deduction. So this has changed a little bit for 2021 also. In calculating your return, so after your adjusted gross income is calculated, now, even if you are not itemizing, you may be able to take a deduction for charitable contributions, which could be $600 married filing joint or up to $300 for all other taxpayers, single or head of household. And this would then come off of your adjusted gross income and calculate into your taxable income. So you wouldn't see this on the itemized Schedule A. It would be right on the front page of your return, but you would be able to take the deduction for charity. This has never been the case until recently. In 2020, you were allowed up to $300. So they've increased this now. For married filing joint, you can each take $300 and get a $600 deduction. So include your charitable contributions to us.
Yeah, definitely. And I just want to note, though, the above the line deduction, Kelly, in addition to your standard, only applies to charitable contributions made in cash to a qualified charity. Okay.
Cash,
So,
right.
yes. So if you contributed, non-cash assets, you had, you donated, household items, clothing, that doesn't qualify for this above the line deduction.
Include that if for determining if there's itemized deductions, you may be able to take it there. And for the itemized deductions, back on that prior slide, they've removed the limitation there on cash contributions as well for those who do itemize. I think there's more information about charity here on our next slide. For cash, you do need a written acknowledgement. If it's over $250, you should get a letter from the organization. The charities, the 501c3s often send out a letter acknowledging the amount of your gift for that tax year. If it is a non-cash contribution and it's over $500, but less than $5,000, you have to provide details. There's an additional form then that we have to fill out with your return, 8283, and it would require information about the organization that you donated to, and then the value of the items that you donated. So we might have to get a little bit more information depending on the amount of the deduction you're looking to claim. If it is over $5,000, you would need a qualified appraisal to include with the return. Donating a car, that's additional. There's a special form you would get, 1098C, I believe it is, and that's for donations of motor vehicles or boats, something to that nature. So that would be sort of a rarity, but if you did have that occur this year, look for that form and include that to us, and we would attach it when we file your return. So then there's the miscellaneous itemized deductions. Now, unfortunately, these are still suspended. These used to be deductions over 2% on the Schedule A, but unfortunately with Tax Cuts and Jobs, this was removed. However, and you can see Mary's little smiley face at the end, please still track these and include them for us if you are, spending this and these are expenses that you have, include them. Because your state, they may be deductible. I know New York is one. So if you're able to itemize for your state, you may be able to get a benefit for some of these items on a state return. Okay.
So now I'm going to take you through some tax credits that some changes to tax credits that you're entitled. Some people may be entitled to this year. Number one, the child and oops, I think I went one too far, Cal. Let me see. It's the. Let's see. Oh, here, no, it's right. The child tax credit, there it is. The child tax credit was expanded for 2021 under the American Rescue Plan Act. And now more people, you can now claim a child who is age 17 and below. Actually 18, the cutoff is 18. It used to be 17. Now, if your child's 18, they're still considered a dependent. You can claim a full credit for them, not just the $500 credit. The credit now is fully refundable for many taxpayers, as opposed to being only a portion of it being refundable. And the maximum credit is increased from $2,000 per dependent to $3,000 for qualifying children up to the age of 18 and $3,600 for children that are under the age of 6. Okay, so now you see that this is where the expanded credit comes into play. The original credit was $2,000 per qualifying dependent. Now it's the $1,000 expansion, the increase, or the $1,600 if the child is below the age of 6. That expanded credit amount is phased out pretty quickly. It is phased out if your AGI is more than $150,000 for a married filing joint couple, $112,000 for head of household, and $75,000 for all others. The phase out for the increase is calculated separately from the base. Okay, the base being the original credit amount of $2,000 per dependent. So the phase out income limits still apply to for the base amount of the credit, Kelly. So if you have generally adjusted gross income of less than $400,000, you're going to get some type of child tax credit for 2021. And you may get quite a bit. And now this year, the credit is refundable. So that would really help you on your tax return as well. That's going to be something new. Now, what got a lot of print this year was that the IRS decided, because a lot of families were hurting because of the pandemic, they decided they were going to give the child tax credit, the refundable credit, in advance to a lot of taxpayers. So they would be entitled to up to 50% of their credit amount in monthly installments that started in July of this year. If you received one of these installments, or received these installments, then we must reconcile, the installments that you received to what you're actually qualified for when we file your tax return this year. And this is where that letter, the IRS letter 6419, is going to be crucial to us this year, because if we don't do this properly, you risk having, your return pulled by the IRS to make adjustments to, or your refund, which could be a pretty good refund if you're getting a refund of these child tax credits, would be delayed significantly. So we want to make sure we calculate it correctly. We want to make sure we have all the information to do so. So make sure that you are providing that to your tax preparer this year. It's really important. Anything else on that one, Cal, that you want to add, or no?
No, we can move on.
There's a lot. So then the next item was the child and dependent care credit. That was also significantly increased for many taxpayers this year. Because of the pandemic, many working parents were having to pay for childcare out of their pocket, working from home. So now this, for the first time, and for the 2021 tax year only, the credit is fully refundable up to the maximum credit amount. And there's a calculation that goes into it. It's 50%. In the past, it was 35% of your qualifying expenses. Now you get up to 50% of your qualifying expenses, childcare expenses, and the max is raised from $3,000 up all the way up to $8,000 per child, Kelly. All right. The most you can take is $16,000 for all of if you have more than 2 children, you're still going to be capped at $16,000. So that is, pretty significant, and I think it should help a lot of families, who need it, because and this refundable credit starts to phase out at kind of a low income tax AGI. for our area, Kelly. So starting at $125,000, this credit is being phased out. And it's fully phased out up to $438,000. So you're still going to get some credit, but the large amount is going to be phased out pretty early on. Okay. What do we have now? Some other tax credits that were impacted by changes would be the adoption credit. It is been increased now to up to $13,810. People are still eligible, depending on what make and model of electric car that you purchase. There's still an electric car credit, which can be up to $7,500. And then there's also another credit that I saw a lot of people take advantage of last year. That's the alternative fuel vehicle refueling property credit. That's a lot of words, but it basically, some people have installed charging stations in their home, in their garages, and you get, I think it's up to $2,000 a credit for that towards your taxes. It's a percentage of the total cost of the charger, by the way. The other thing that we talked about briefly was the recovery rebate payment. There was a third one issued to taxpayers in 2021, around, I guess it was around the spring and summer that these went out, and the maximum credit was $1,400 per individual. It also included dependents. And it was like all qualifying children were covered. It was all your dependents, not just your qualifying children. The prior stimulus credits were capped to qualifying children. So if you have other children that are still your dependents, maybe in college, you're eligible to get a stimulus credit for them as well. What makes this stimulus payment a little different, even though it was much more generous to taxpayers, not as many people qualified for it, Kelly, this year. So if you're filing a joint return and your adjusted gross income was $150,000 or more, you get either a phased out amount or nothing. It's completely phased out once you reach the $160,000 range. So it's really meant for the lower income taxpayers to give them, an additional stimulus to help them through the difficult pandemic times. Okay. Some other things I wanted to point out. There's, other limitations for household, head of households and single taxpayers. I think that goes without saying. Oh, and make sure if you did receive the rebate, look for that IRS letter 6475. We'll need that. Again, this is another thing that will be reconciled when we file your tax return for 2021. If for some reason you received a rebate and then when we reconcile your return, you're not entitled to it anymore, unlike the advanced child tax credit, you don't have to pay this back. That's fine. However, if you didn't qualify for the recovery rebate, but now when we file your tax return, you do qualify, you'll get an extra credit on your taxes, and that is refundable for 2021.
Okay, so Mary, before we move into the next section, which is our workflow process, we had a couple of questions that we might want to address here.
I'm wondering if we should hold it to the end because I'm worried a little bit for time, Cal.
Okay.
Why don't we just blow through this and then we can take some questions at the end? How's that?
Perfect.
Okay.
Right, so then I'll move into workflow process, which this part of our presentation, we kind of want to highlight for you what happens to your information when you send it over to us. So give you a little bit of insight in how we work and what the process is for preparing your return internally for us. So once we get your information, and that's however we receive it, if you email it over to us or send it electronically, if you send us paper documents in the mail, however we receive it, on the day we receive it, it's checked into our workflow system. This is a software that we use to track internally to know where in the process your return is. What we're going to be doing this year and going forward is when we receive your information, we're going to send out an email to you to confirm that we've received your information and that we are logging it into our system. At that point, then, all your documents that you send to us would be scanned into your client folder. So think of it as sort of an electronic filing cabinet, filing system that we use with everyone's name on it, the way we would have, had a drawer and, in prior times. Now it's electronic. And so there's a folder with your name on it, and all your documents get scanned into that file that is yours. We then move into a process which is called auto flow. So eligible documents that are a standard form from the IRS, similar to the ones we listed earlier, a W-2, a 1099, those forms can be read by our software. So they go through this auto flow process, and they're auto flowed through and validated by our software. Certain forms, if you wrote a handwritten note to us, or if you had a paper form where you listed all your medical expenses and the amounts, if it's not a standardized form that the software can read, we have to go through those manually and review those. But all of the ones that are standardized can be read electronically. At that point, all of it is scanned, regardless of the type of form, into one file, and your return becomes assigned to a preparer. The preparer gets your electronic copies, everything, and begins to go through your information. At this point, they start to review what you've provided to us and sort of cross-check to what we're expecting to receive and what documents we need to complete your return based on the prior year. At this point, if there are any forms missing, we would reach out to you to let you know we're missing certain documents in order to complete the return. Sometimes it's not a document we're missing. Sometimes it's additional information or a question we might have on something you provided to us. So usually you would get an email or a phone call and a list of what it is we need. If you already know when you're sending in, please note that to us. If you know you're missing a form and you're still working to get it, or it's one of those forms that we mentioned might not be ready until maybe March 15th or closer to the entity filing deadline, that it's not in your package when you send it, it helps us if you can note that to us, because then we are aware that it's missing and that you're working to get it to us and send it over. At this point, the preparer enters all of your information. They go through and they essentially prepare your tax return. Once they have it all completed and that they've worked out those missing items with you and questions are resolved, the return would pass from the preparer to a manager or partner to be reviewed. Okay. At this point, it's a detailed review. So someone is ticking and tying and checking the numbers, making sure that everything is where it would be, a spelling error, whatever it might be, that everything is correct. If there are any changes that need to be made, the preparer will receive a list back from the reviewer of any changes that need to be addressed. Anything that's missing, anything that they want to discuss would all be cleared up at this point in the process. The preparer goes back through all the detail notes and makes all the changes, and then it's sent back to whoever reviewed the return, the manager, the partner, and they ensure that all of those open things have been addressed and then signs off. Once everything is completely signed off, no information is missing, all the errors or changes have been addressed, the partner signs off and the return is sent to our administrative team for processing and assembly. At this point, they put together your package and the returns are delivered to you. Now, this is most often done electronically. You get a secure email with PDF files, and I believe, Mary, you'll go over briefly what those files specifically are.
Yeah.
But it will all come in one email, and you get an electronic PDF copy of everything. If you have specifically specified to us that you want a paper copy, then at that point it would be processed in our administrative department and sent out to you via paper. But that's definitely a rarity at this point. A few paper copies are always requested, but it's slower, and most often we do it electronically. When you send over your information to us, if you provided documents to us, original copies, we always send all of those back to you via snail mail, traditional mail, so that you can keep all of your originals. Mm-hmm. But that's, in a nutshell, our process of how your return moves through receiving your data, becoming prepared, being reviewed, and then finally sent out to you in a final package.
Okay. I'm going to try to blow through some of these, just go a little more quickly. So I want to save like 5 minutes for questions here. When you receive your return electronically, what's included in your package? So it's a secured email that will come from our Tax Central team, and you're going to get four different documents in that electronic file. The first file is going to be a cover letter that's basically going to say attaches your return, and it will list the returns that are included. That folder will also include any payment vouchers that need to be addressed. It will include any quarterly estimated tax vouchers with instructions that you will need to attend to. Generally, your first one's due April 15th, so you want to take care of that right away. So that's sort of the file that requires your attention and action. Definitely want to print that one out. The second file is an e-filing checklist. You can just review that on the screen. I'm going to show you what that looks like in a minute. The third file, another one you'll want to print out, is your Form 8879. I'm going to back up. You'll want to print out this form if you are going to manually sign your 8879 and submit it back to us. We do have an e-signature options for our returns. We tested it out on quite a few returns last year, and it worked very well. So that is something that your preparer will be asking you if you're interested in electronically signing your 8879s this year. And I really encourage everyone to try it, Kelly, because it does make the process go quicker. You won't have to print out your 8879s and then scan it and send it back to us. Once you electronically sign that 8879, your return will be filed the same day. So it's a really good thing. It does help with the process. The fourth file is really an entire copy of your 2021 federal and state returns. You'll want to have that on the screen and review it on the screen prior to signing any documents to make sure that everything that's included on that return, you understand it. If you don't, ask questions, and just take a quick peruse of it because it is something we want you to understand. Okay. The next is the e-filing checklist. I told you that this is what that looks like. It reminds you of all of the things that you need to do once you receive your package. And this is true whether or not you get a paper package or an electronic package. You want to review your returns. You want to sign your e-file forms either electronically or manually. And then you want to send your e-file forms back to us, either via fax or via a secured email. All right. And then what's next, Cal? If you have any questions, you can always call us here at the department. So in summary, what do you have to do when you receive your completed return? As I said, you want to review it, make sure it's complete and accurate. And so there's a new 1040. There's a couple of changes, Kelly. I just want to show them. Oh, it's kind of hard to see. I was going to just show you that there is one box on page 1 that talks about did you buy, sell, or exchange? Can you read that, Kelly? Oh my gosh. Any virtual currency during the year? This is for the cryptocurrency. If you did, this is the IRS is putting that front and center for you. So, that's one of the changes. And then it's basically the same. They've made it a little easier for us to review, but it's basically the same. All right. This is sort of just reminding you that if, we really, historically, some taxpayers, don't send back the 8879s to us immediately. And it really does cause for a scramble at the end of tax season to get all your forms in. So we ask for your cooperation to sort of attend to these steps, once you receive your tax return package. And that way you can ask any questions that you have before signing off on your 8879s. If you wait till the end, it might be difficult, because everyone's, moving so quickly to get things, and your questions answered at that point. All right. I also wanted to mention that your returns are not considered complete until your 8879s are signed and sent back to us. All right. I think that's it, Kelly. Now, we don't have a lot of time left. We got 2 minutes. Let's see if we can take a couple of questions here.
All right, let me go back and let's see. So I think the most recent question that we haven't addressed is the filing deadline for expats also March 22nd.
Oh no! If you're an expat living outside of the country, you actually have until June 15th to file your tax returns. You get an automatic extension past the April 18th deadline. Is that, hopefully that answers your question there.
Okay.
Maybe one more, Kel.
Let's see. Regarding the tax returns, can you get both paper and electronic?
Well, we prefer to just, send one or the other, but if that's something that you really are interested in, we can try to accommodate you for that, for sure.
And do the FBARs come in one of those PDFs?
Yes, absolutely. That's all part of your tax return package, Mark. Yes, that's part of it. It'll all be in there. And that is, a separate electronic filing in a separate form you need to sign for that. Mm-hmm. And I think that's maybe one more. How about are RMDs treated as ordinary income for both federal and New Jersey? RMDs meaning the required minimum distributions that you receive from your IRAs. I'm assuming that's what it is. And yes, that is ordinary income. That's to you. All right. Anything? Well, I think that's it for today. Any questions that we did not address, we will review and get back to you at some point. Right, Kelly?
Yeah,
Thanks
we can
for
follow
helping
up
me.
offline.
Yep. Thanks for helping me out with this presentation today, Kelly. And thank you everyone for joining us for the webinar today. And I wish you a very smooth tax filing season. And if you have any questions for either Kelly or myself, we'd love to hear from you.
Thanks, Mary.
Have a great day. Thank you, Kelly. Bye.